I'm joined today by Steve Buller, Portfolio Manager at Fidelity Investments. Welcome, Steve.
Thank you.
So, Steve, is there any sign yet that the election of Donald Trump is having an impact on global property markets, or is it too soon to say?
Well, actually, a week after the election results, we've seen a significant impact, at least in the REIT market. For example, the prison stocks, although there's only two of them, we've seen tremendous outsized growth in their share price, primarily because Hillary Clinton on her platform was to get rid of private prisons. Another area that we've seen a lot of new uncertainty is in the healthcare REITs. Obviously, what Donald Trump's going to do with Obamacare and the impact that that will have in terms of reimbursement on a variety of different facilities. On the flip side of it, we've been puzzled with the impact to industrial or logistics REITs. A lot of people are interpreting that he wants to be protected or have a platform of protectionism, whereby then we'll see less global trade and that will impact. At the same time, we think that some of his policies could be good for GDP growth, and hence why that could be good for the logistics REITs.
And are there any property sectors which are showing particular buying opportunities?
Well, that ties nicely into that. We see right now the logistics REITs being a good opportunity because they've suffered in the past week, and we don't necessarily believe that they're going to suffer or their fundamentals will in the future. If GDP growth goes forward and grows at an outsized pace in the near term, you will see more demand for logistics facilities. In addition, the e-commerce phenomenon is obviously going on.
And what do you think is going to be the big story for REITs in 2017?
I think the big story is in 2017 that REITs can perform well even if long-term interest rates are measured by the 10-year U.S. Treasury. If that yield continues to go up that we've seen in the last week, that REITs can perform okay in that type of environment. Historically, we've seen after the initial shock, i.e. of the yield curve shifting up, that REITs then start to perform quite well, where the fundamental side starts to kick in. That is, stronger GDP growth usually leads to higher rent and higher same-store NOI or net operating income.
Thanks very much, Steve.
You're welcome.
And for more news and information on all things REIT, be sure to visit REIT.com.